What's going on, everybody? TG here, back with one last video of 2020. Guys, first off, thank you so much for all the support that we have had this past year. I made this channel about 4.5 months ago, and we have just seen tremendous support. We've hit 1.5K subs. Just amazing. I'm so blessed for each and every one of you, and I've met so many of you, and I've been able to talk to you guys on Discord. Link in the description below, by the way, if you guys want to join, totally free. And I have learned so much this year as a person, as a trader, as an investor. I have learned so much, and hopefully I've taught you guys a lot as well. A lot of you guys are extremely thankful and awesome in the Discord, and it's been an honor to have served with you this past year in this insane market that we have had with these insane runs. And I am stoked, absolutely stoked for 2021 to see what is in store. You know, a lot of people were going and saying this is the worst year ever. 2020 sucked and all that. We could have learned a lot, and I try to take advantage of learning a lot. The year started off really bad. You guys are going to see. I'm going to show you guys in this video the worst of the worst when it comes to trading and the awful mistakes that I made in the beginning and in March and even in June, that I've taken some big 5-figure losses within a day or two. Stuff that really shatters you inside. But I have learned a lot, and I've used those losses to really learn and to grow as a person, to grow as a trader, to grow as an investor who's, trying to invest for his future and trying to teach you guys the smart ways to do that as well. Guys, thank you so much for everything. I hope you guys enjoyed this video. I put a lot of time and effort into it, having to scroll back and find all these trades that I've made. PTSD on some of them especially. But guys, I hope you enjoy it. I hope you had an amazing year. I'm going to do a giveaway as well. Why not? Giving away $100. All you have to do is just be subscribed and like the video, and you're going to be entered to win the giveaway. Just giving back to you guys because, I love YouTube. I don't make any money off it, obviously. I don't have ads or anything, but, giving back to you guys is awesome, and having a great community of just some great people, that's really what's worth it for me. So thank you guys for everything. Let's jump into this video. Before we see what happens this year, let's wind the clocks back 1 year today to see how we were doing. Obviously doing pretty freaking well. Account up 153% in the past year. We're riding high. We're going into 2020 with a ton of confidence, a ton of happiness, and a ton of wealth. Let's see how this ends up. And for the first 2 months of 2020, everything is going smooth, just according to plan. We're holding our Ameren shares that we got at about $19 a share, and we're just writing covered calls every single week, making a couple $100 a week. Some really good, about 5% a week on these covered calls every single week, and we are raking in the premium. Everything is good. The stock got FDA approval. The CEO goes on CNBC, and it is an absolute success.
So previously we had a niche indication, an important niche indication, but it was for lowering triglycerides. Triglycerides are fats in your blood. Now we're looking at lowering cardiovascular risk. So if you think about statin therapy, and statins are important, they lower cardiovascular risk. So Lipitor, the largest used statin, lowers cardiovascular risk by about 25%. We lower cardiovascular risk by about 25% on top of their 25%. So this is millions of people.
So everything's going good. Everything's working out great. We're raking in a ton of money every single week. But there was something at the end of the interview that the CEO said that kind of worried investors and kind of worried me as well.
I have to just quickly ask you about the next catalyst that investors are already looking at, which are the patent challenges to the drug. Can you tell us about, are you looking at a settlement? Are we going to trial early January?
So I think there are a lot of catalysts. We're looking for approval for this drug in Canada. We just filed in Europe. We're looking for completion of a clinical trial in China as well. This is a major drug. Anytime you have a major drug, you always have patent challenges. We're confident in our patents, and we're intending to defend those vigorously.
So around February is where things started to go down for the worst for Ameren. Basically, they had a patent lawsuit against them from a generic drug company that wanted to get their drug into the market that basically did the same thing as Ameren's, but it was a generic drug and they could sell it for a lot cheaper and undercut Ameren. No one thought this was going to pass. Everyone thought, Ameren, they have the patents, they're secured for this, and they're all good, right? Not really. The stock decided to tumble a little bit throughout February, going down at about the 17, 18 range. We were still up a lot because we're just, like I said, writing our covered calls every single week. But this patent lawsuit kind of hung around and lingered around, and it caused a lot of investors to be nervous of Ameren. And then, of course, COVID happened, and we know what happened then.
We're coming on the air at this hour with breaking news, concerns over the coronavirus outbreak, and once again, they are affecting the stock market. Look at that right there. Wall Street ending one of the worst weeks of trading since the financial crisis in 2008.
Stocks, they fell hard again today. Economic fears and many unknowns rattling investors. The Dow falling another 1,300 points. It now closed below 20,000. The Dow is now down a mind-blowing 10,000 points from its all-time highs hit just last month. Let's put that in context. It took the Dow 103 years to first hit the 10,000 mark, and now we have lost 10,000 in fewer than 30 days.
And just as fast as we made all that money, it came crashing down only days later. Every day it felt like my account was getting wiped out more and more. 26% one day, 33% the next day. It was hard. I'll admit, guys, I was almost at a breaking point. Seeing that much money get lost in a couple days as someone who was only a junior in college, it was hard, and I really struggled. I'll admit, I couldn't go to class. I couldn't focus. Even at tennis practice, I was constantly upset and sad. You know, it affected my relationships. It affected everything. And it taught me. It's one of those moments where you're just like, shoot, like, what is going on? Like, you're trying to do all the research you can. You feel like you invest your money to be smart and to make money, and, you know, then you're just losing all of it, you know, over and over and over again every day. And it felt like it was an eternity. That month of March felt like it was an eternity. And it was one of the hardest things, was to get the will to get up, get out of bed, go work out, go find some positive, because it was hard and it was extremely difficult to see numbers like that and not constantly, you know, pick up your phone and check it. Oh, what's the price at now? Like, it was very unhealthy and it was very depressing. And I'm very glad we're not in that time anymore, because it was extremely hard, and I'll admit, I struggled a lot. And just when you think things can't get any worse for Ameren and all the damage is over, what happens? The U.S. District Court for the District of Nevada rules in favor of those generic drug companies and invalidates Ameren's patent for Visipa, which is their biggest and only drug. What happens to the stock? It drops 70% in one day. Boom. The stock absolutely falls. But for us, we actually got very, very lucky. If you remember, I was selling calls on Ameren every single week. So we go back to March when this all happened. Oh, what happens right here? March 27th, I sell 20 contracts, all 2,000 shares, for a 12.5 strike price. Well, as we know, Ameren goes to 13.5, and I end up losing my shares. And at first I'm like, darn, I just lost out on a whole dollar. You know, shoot, I just, lost out on $2,000. Well, the very next day, the stock crashes to $4 a share. Had I held those shares with the margin that I had, I would have lost every single dollar in my entire account, and my trading career would have been finished on March 31st. But luckily, because of those covered calls, we lost those shares and someone else took that fall. So we did kind of get blessed, and that was the start of a comeback per se. So March was finally over. The bloodbath seemed to be done. We had lost half our account in a couple months, and we were determined to get back. So what do? We put a bunch of our money into a Dow put, and it ends up paying off big. We bank $5,900 in one day, almost 25%, and we get our account back on track and ready to roll. Things are going solid. We've recovered so much. We're only down now about $4,000 in the past 3 months, as being down a lot more earlier. Our account's back on track, and we are making good plays. We're buying calls on the Dow. We're selling covered calls for Pfizer. Everything is working out good, and we are building our account back strong. We've even managed to double our TD Ameritrade account that we started with about $5K. We ended up getting it to about $11.2K and withdrew it all and threw it all into the Robinhood account thanks to CVM. But unfortunately, all good things have to come to an end, and our reign of buying puts and calls and making it work ended in a tragedy. We started buying puts on things like DraftKings, Boeing, and Amazon in the summer of June. If you guys remember that, when the airlines and everything were flying, we bet against it, and we got absolutely hammered, losing about $20,000 in approximately 2.5 weeks. So the run had ended. We had gone from being up huge at the end of April to being absolutely obliterated at the end of June. and I had to change up my strategy. I had to deposit a lot of money into it that I made from working, and I was like, I gotta join Theta. I have to join Theta, gang. I cannot keep buying these options and losing this much money. The realization hit when I did that Amazon put, and I found myself laying in the bathroom on the floor, sick to my stomach that I just lost $5,000 in literally less than 15 minutes. I'm not even exaggerating with you. $5,000 in 15 minutes. It was one of the worst feelings in my entire life. But it was a wake-up call. You know, when you hit rock bottom in the market, you got to realize something. You have to change it up. And I had to change it up. I knew that I wasn't going to make a fortune. I wasn't going to make a ton of money, you know, selling calls and selling puts. But I knew over time that I would. And I knew over time I'd get consistent gains. So what do? We started selling some puts, selling some calls, and we slowly started making our money back. Slowly but surely. A month later, we're sitting at 66,000. We're like, wow, this is going good. You know, we were down 59, down about 22%. Now we made our way back, only down about 14%. I was like, all right, this is good. Keep going. You know, September hits, and obviously there was that little flash crash. So obviously it took a big hit then, but you know, we're still up a lot more from where we were. We double down. We buy a lot of Amazon. We've been buying Amazon through here, holding it, doing some selling puts on different companies like Apple, selling covered calls on Apple. You know, we're making our money back. We're making it back slow and steady. You know, October was pretty good to us. We made a lot of money. Oh, wait a minute. We're up for the year now. How did this happen? Okay. And then, you know, obviously we go down at times, and, you know, when little crashes happen, we go down. That's what happened today. But that's what it was, you know. It was changing our strategy, changing to Theta, selling calls, selling puts, playing the safe road. And if you notice, you know, obviously while we do have some peaks and valleys here, it's pretty consistent up. And that's what we like about it. You know, we're not taking big risks, but it's working out well. And just like that, from being down 20,000 for the year, we are now up $10,000 for the year. An absolute wild ride in the market that we have had, and it's just absolutely incredible. I mean, I started this account about a year and a half ago. As you guys can see, you know, we didn't do anything then, and we really started it about September of 2019. And, you know, about a year and a half later, not even, you know, we're up $22,500. And as you guys can clearly see, once we switched, you know, June 26th, like I said, it's been an uptrend. And that's what I try to preach to you guys. I try to preach something that's safe. I never want my viewers to lose money and, you know, to take these big losses. I don't want them to make the same mistakes that I made, you know. This stuff right here, this M-shape account, that's not healthy, you know. Yeah, I was, you know, down in March, like I said, and, you know, made it all back and much more, you know, 15K in a couple weeks and then losing 20K in 2 weeks. Like, that's not healthy. It's not safe. And, you know, especially for our mental health, you know, mental health is a huge thing nowadays. And, you know, especially when you're dealing with something as emotionally taxing as trading, it's a very smart thing to do is to play it safe and long term. So, you know, we do our credit spreads, which are also pretty risky, as you guys can clearly see. Credit spreads can be risky when not used correctly, but you give ourselves a lot of time and a lot of safe stuff, you know, saying NVIDIA is not going to go under 475 or Amazon's not going to go under 2850, you know, stuff like that, stuff that's pretty safe. You know, long-term betting on the market, you know, you do pretty well. And obviously we are using some margin, as you guys can clearly see, using about 10K in margin, and that's to buy our Amazon shares because we do believe in Amazon long-term. And we are up a little bit on it right now, about $3,800 on it. But guys, this has been a wild ride. It's been crazy. And to be able to, you know, have that chart and to see, you know, the progress that we've made and, you know, learning from our mistakes and, you know, having to go through it to actually learn it sucks. Like, I wish I didn't have to lose all that money to realize, hey, this is how I should trade. But I'm glad I did. And I'm glad I learned, and I'm glad that I could share it with you guys. And as hard as it was to look back at some of that stuff and see just how much money I actually lost on just stupid, reckless plays, you know, I'm glad I was able to go through it, and I was glad that I was able to teach a lot of you and show you guys firsthand, like, hey, this is the stuff that can happen when you play it risky. So I hope you guys enjoyed this video. I hope you guys, you know, got something out of it and got to go down memory lane with me a little bit and see how I made it and lost it and made it back again. And, you know, hopefully playing it safe like this mainly with Amazon and, you know, big tech long-term I think we're gonna be okay. I think we're gonna do good, and I can't wait to share my journey with you guys. So if you enjoyed this video, hit that like and subscribe button, and I will talk to you guys next video. Have a wonderful new year. Thank you guys for everything. Bye.